This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Thank you for tuning in to the Alternative Investing Advantage podcast. My name is Alex Perny. Today on the download, financial markets are primarily focused on the earnings reports that are going to be coming out. It is third quarter earnings season, so it is going to be an exciting time to watch with a lot of movement on the markets. So the primary things for us to be watching right now is how these things are going to play out. The primary focus is on going to be labor shortages, people trying to get supply chains up and running after all of the issues with COVID. So that will be a big thing to watch right now with regard to how things are going to play out in the markets. It's going to be really hard to tell until some more of the earnings reports come out. It's kind of early in this to really make a determination on seeing how the securities markets are going to be affected. But the profits and earnings of these major corporations that are going to be released in the coming weeks are something that is going to be very closely watched. Some of the things that are going to be big ones to look at are banks' lending activity. That is a large indicator for some of these companies on how capital is flowing past just the initial reports of how much money they have taken in or they have been losing. So something definitely to watch very closely is how banks' lending activity will play into that as well. Two calls that are going to be very important to watch as well are JB Hunt and Fastenal. While typically not the most exciting companies to track, JB Hunt Transfer Services, Inc. Is a player that will be very indicative of supply chain shortages as well as Fastenal as well. So two companies that can very well act as maybe a canary in the coal mine of some of the supply chain issues that we have been seeing or that people have been talking about over the past several months and years with regards to COVID-related issues. This has been The Download. Today on the What Is, after hours trading. Circling right into what we covered today in the download of earnings reports, after hours trading is something that is very closely tied to earnings reports. Now, most people don't realize that there is the ability to trade stocks outside of the normal hours of stock trading in the United States. After hours trading normally starts at about 4 p.m. Eastern time on major U.S. Stock exchanges and can run to as late as 8 p.m., though typical volume typically thins out much earlier in the session. Now, what exactly does this mean? Well, during normal hours, there are market makers that are providing large swaths of purchasing power for people that want to sell securities and also people that want to buy securities. However, with regard to after hours trading, since there are not nearly as many market makers actually producing markets for these tradable securities, the volume and stock price might fluctuate wildly with having very big constrictions on participation of people being able to sell things. So in this case, you might have a holding, but may not necessarily be able to sell it, or you might have bought something and the difference between the bid and the ask price might be very significant when it comes to actually how the security is traded. This has been The What Is.
Alrighty, today we have another edition of the Alternative Investing Advantage podcast. Today we are very lucky to have my friend and acquaintance, John Hyre, an attorney that specializes in tax and real estate law, who's been working in the space of self-directed IRAs and real estate for many years now. I've had the pleasure of getting to know him over the past 6-7 years, and he's extremely sharp, and he is on the same boat as us with the new act or I should say new act, the new set of legislation, the infrastructure bill that's trying to be passed on reconciliation that will have extremely far-reaching consequences for self-directed IRAs and anyone that's not just content with investing in Wall Street. So, John, thank you very much for being with us today.
Glad to be here. Hopefully we can reach a lot of people and get them fighting.
Yeah, absolutely. And again, this is kind of a follow-up to the special edition that my colleague Scott Maurer and I did about 2 weeks ago now, kind of encouraging people to get out there, write their representatives. But since then, we've had some more clarification. The full text of this bill has come out. So although it is not any less frightening necessarily on the front of what this thing contains, it's, as bad, if not, worse than we kind of imagined. We do at least know what we're fighting now and have a little bit better of an idea of whom needs to be contacted, what we can do, and the like. So, John, I want to kind of lead off with this. What are the big bullet points that you, as an attorney in this space, are really concerned with for your clients and self-directed IRAs in general?
So to keep us on time, I'm going to hit just the salient points. There's more detail and we can tell you where to find it. First of all, the ostensible reason for this, and I say ostensible because there's much more to it, is to stop the Peter Thiel situation, specifically somebody from growing their Roth IRA to $5 billion by undervaluing things they buy in it, which I frankly don't have a problem with. And they solve literally, if you do the math, 99.98% of the problem with one portion of the bill. Specifically, they limit your combined retirement accounts, not including defined benefit plans, so just defined contribution like IRAs, 401ks, et cetera. They limit all but your defined benefit plans to 10 million. And their enforcement mechanism is anything above that has to be distributed or 50% of anything above that has to be distributed. And if it's not, there's a 50% penalty. To give an example, let's say your limit's 10 million, you have 11 million, you have to distribute 500,000. Because the excess is 1 million, 11 million minus 10 million. Half of that, which is what they require you to distribute, is 500,000. If you fail to do so, the penalty is 250 grand, 50% of the amount that you failed to distribute. That's a pretty effective enforcement mechanism. I actually think, they should raise that limit some, and I don't like the way they adjust it for inflation. It's just on the CPI, which grossly understates inflation. But I think it's overall an effective tool. And if you do the math, Peter Thiel, 5 billion, limit, at least presently 10 million. Do the math.
Like
10 million
is the way you're taken care of.
No, more. I mean, it's 10 million is it's 20% of a percent. They are solving 99.98% of the problem. And if all they were looking to do was stop Peter Thiel, we'd be fine. What they're really looking to do is end self-directed IRAs. And we can talk about who's behind that if we have time. I mean, there are footprints and fingerprints here. Oops, my phone was not set on silent. I apologize. I'm usually
not a
pretty good at
problem. And to that point, it's for those of you listening out there, it's not necessarily an attack on, them saying self-directed IRAs, in general are banned, but what they're doing is they're going after a lot of the different asset classes or a majority of the types of assets and structuring classes that self-directed IRAs and IRA clients use on a day-to-day basis. So while the intention of self-direction is
let me respectfully disagree. Here's what they're doing. They're banning most self-directed IRA investing. They're not honest enough to say we're banning this. They're making it so restrictive that really, based on my experience, 25 years in practicing in the area, well beyond 50% of what I see will be banned, and the direction it was going, because the direction in terms of alternative assets, whether it's crypto or private placements, all those sorts of alternative assets, they're cutting that off at the pass. They're pushing Main Street into Wall Street. I think it's very intentional. I don't think it's a complete ban, but when you hear the restrictions, I think it's awfully darn close. I just don't think they're honest enough to ban it directly. So they're making it so burdensome that a lot of the things we're used to doing, we can no longer do. Let's get into that. And sorry for interrupting. I mean, you know how to interrupt back.
No, absolutely. It's the administrative infeasibility that they're going for. They're not going to outright ban it, but they're going to make it too difficult or too narrow to make it a feasible option for people.
Exactly. And that's how they do things. They smother it. Shooting it is too open, so they smother it and
exactly.
Don't let it have a lot of oxygen.
Yeah, so let's roll right into what's going on.
All right. So there are really two really bad parts. Death of IRAs, part one. So you can no longer invest in anything where the IRA owner, and it's just right now, I'm just talking about IRAs. It does not apply to 401ks for now. For those of you who are all happy and complacent, oh, I don't have to worry about this. It's only for IRAs and I have a 401k. What do you think's next if they get away with this? You have a dog in this fight, even if you don't use the IRAs. Or let's say you don't use IRAs now, but you might want to in the future, because it's obviously, I mean, Peter Thiel showed us a tool for building wealth, maybe perhaps not to quite that extent.
Now, just real quick before we jump into that, now, just to clarify, does the bill explicitly delineate between 401ks and IRAs for the purpose of these exclusions?
Yes.
Okay, good.
Yeah, so the two things I'm about to mention are solely applied to IRAs. And so we'll talk about at least temporary workarounds, some of which would involve, if you can, getting your traditional IRA into a traditional 401k. What's the problem? If you have a Roth IRA, we can only roll that into another Roth IRA. There's no escape. So that's a big problem. I don't have a workaround for Roth IRAs on what I'm about to say. So they're trying, it's a pincher movement. So it's like a crab hitting you from both sides with the pinchers and surrounding you. What they're first saying is any investment that depends on your personal income, assets, education, or licenses. So any investment that requires you to be, for example, an accredited investor, a sophisticated investor, crowdfunding investments, all banned, gone. Your IRA is not allowed to invest in them. And here's their reasoning, and I'm not kidding you. I'm not making this up. It's not fair. Not everybody can invest in that. You have to be accredited, and not everybody can invest in accredited things. So we're going to stop your IRA from doing it. What they're really doing is forcing your IRA into Wall Street. Once you see the second half of this, they're saying you can't go into these PPMs, you can't go into these private stocks, these ventures. That's all gone. So if you need to be an accredited investor, a sophisticated investor, or meet certain crowdfunding income criteria to invest, that's gone. Your IRA is no longer allowed to do that. And for especially enders who want passive alternative investments, they want to invest in Main Street and things they understand, like real estate or minerals, certain types of crypto, et cetera. That's just gone. If you want passive investment in your IRA, you have to go to Wall Street, period. That's what they're doing.
Yep.
So that's part one. And what's the penalty, by the way? Death.
Yep.
If your IRA does any of this, even inadvertently, even by accident, your IRA dies. Death, death, death. Now, what they're also saying is if you're in these kinds of investments, they're going to give you 2 years to get out. Now, think about that. A lot of these investments you're already in are not going to be done in 2 years. They're not going to be cashed out. So what do you have to do? Either fire sale or distribute. Are they giving you an exception to the penalties for distributing? For example, the 10% early withdrawal penalty? No. They're just saying you got 2 years to get out. There's no grandfathering. If you have to distribute, pay the tax and the penalties. And if you have to sell at a fire sale, we don't really care that we're wrecking your retirement. Just do as you are told. So that's where it's at on that. Very, very ugly. Here's part two. You are not allowed, part two is really an A and B. So part A of part two, they're coming from the other end. So first they're saying you can't invest in these passive things where you don't really own that much, but you have to be accredited or sophisticated or the crowdfunding. Part two says a lot of these little investments you do on your own are gone. Specifically, your IRA is not allowed to own 10% or more of any entity. Let me repeat that. Your IRA, and it's only IRAs, it's not 401ks, is not allowed to own 10% or more of any entity. Now, let me define entities. Single member LLCs, land trusts, personal property trusts, multi-member LLCs, handshake agreements. Alex, let's say you and I have a deal. This is very common. My IRA puts in the money. You go do a rehab or find a deal. We're going to split the profits. We shake hands because we know each other and trust each other. Now, as a lawyer, I still recommend you set up an LLC and you do paperwork, but all the time people do handshake deals. That's gone. Why? Because a handshake deal between us is considered a partnership. And under tax law, a partnership is an entity. So the IRA cannot own 10% or more of any entity, not a corporation, not a partnership, not a trust, not an estate. And it makes it, they have a special word in there to make sure single member LLCs are included. They want to ban checkbook LLCs. 100% is greater than 10%, right? If you own 100% of something, no, your IRA can't own it. So your joint ventures, your LLCs for, let's say you want to hold a rental in your IRA, but you want an LLC for asset protection, banned. IRA has to hold the rental 100% naked, no asset protection. Let's say you have joint ventures of greater than 10%, where your IRA is more than 10%, banned. By the way, anything you own is attributed to the IRA. So if I own 6% of a company, my IRA is only allowed to own 4%. If I go over, my IRA dies. The penalty is death.
So they're treating it as a like an aggregate average of ownership percentages between personal and to the extension of the IRA. Do we have that?
And they have all the attribution rules. So whatever my spouse owns, it's as if I own it. It's as if my IRA owns it. So there are a bunch of attribution rules.
Property.
Oh yeah, big time, big time.
So, and just in the interest of the fact that Scott and I had covered a good deal of this, but it's always good to have, the perspective of another legal professional outside of this. But what I really want to get at with this is that, people understand that they're coming for, your ability to structure things the way that you want to, and the way that you've been used to, and the way that works. And that's a key thing. This stuff works. People have used it for many years to great effect to help build wealth outside of Wall Street. Now, that's kind of, what could potentially happen. But what I want to help people out is what can they do? Last time when Scott and I were on here, we sent out kind of a generic letter that you can print, send to your representatives, your congressmen. Now, there's a lot more that you've kind of identified, and you have it on your website, handsoffmyira.com as well, which is a good resource for this. Is just kind of a bulletin to look at. I'd recommend people, take a look, because it does list out representatives that would also be able to, possibly help with this. But, you're coming at, self-directed IRA clients, your clients in general, past just me writing my representatives, and my representative is Charlie Crist. So he has a few other things on his plate, maybe trying to run for governor of Florida again. So, there's representatives that may or may not be as receptive to this, but there are people that you've identified that might be even more receptive to getting pushback from this. Explain a little bit of that, and some additional people outside of their congressional districts that they can reach out to.
So right now we're losing. I want to make that clear. Right now in this massive bill, there are so many other interests making so much noise, and IRA investors are not doing very much at all. That I've talked to several congressional reps, and they're mostly haven't heard of this issue. It's some language that got snuck in. So right now we're losing. And we're going to continue to lose unless people get up and make a lot of noise. So let's think about who is it effective to target. Now, I am going to mention party affiliation, not to be partisan. It's not my purpose here to be partisan, but to discuss reality. We want to be effective. Well, the Republicans are all voting against it. And again, we're not going to discuss, do I love or hate Republicans, or do I love or hate Democrats? It's irrelevant. The Republicans are voting against it. So you should contact your rep if they're a Republican, just so they know. You want it to be on their radar. That has value because they do talk to people across the aisle. Who can we effectively sway? The progressive Democrats are not going to change on this. I can just tell you they're not. And I've talked to a number of lobbyists and a number of reps. You're not going to sway them, period. Don't even bother. The ones that you can sway, we have on our website right now a list of about 10 to 12 House representatives who are moderate, who won districts that sometimes go Republican, sometimes go Democratic. Even if you don't live in your district, please, first of all, reach out. Email, write, fax, call. Calling's the hardest and takes the most time. The other three are pretty easy. The more they hear, the better. Be respectful. Telling them that you think they're scum and going to die is probably not such a great idea when trying to persuade. So civil. But here's the most important part, and it takes time, and a lot of people aren't willing to do it, which is unfortunate because they're going to lose this tool. As I've talked with other custodians, I think the custodians are going to lose over half their business, meaning a lot of what goes on in self-directed IRAs legally, legitimately for decades is going to end. Any JVs, any entities, any asset protection, any investing that requires accreditation, that's, I think, more than a majority. We got to fight this. So how do we do it? Guys, you got to tell your story. I think the Democrats we listed on our site really do care. I really think they're moderate. I think their staffers put this language in. They don't even know it's in there. They certainly don't know what it means. They don't know what the impact is. They just know what they've been told by ProPublica, for example. They aren't hearing the everyday impact on real people. So you have to take some time and tell them, listen, for example, in my case, my IRA, I buy rentals in the hood, I rehab them, I'm a good landlord, I don't get code violations, I don't have those issues. I provide reasonable low-income housing. I'm helping secure my retirement. My account is a whole lot smaller than $10 million. I mean, considerably below even 10% of that. We provide really good housing for people in distressed communities where banks won't lend. And we provide good housing. They need to hear that. They need to hear IRA is my retirement vehicle. Maybe I don't have access to much other vehicles. I don't work a W-2 job. I don't have a 401k at a big corporation. You've got to tell your story, first of all. You've got to tell it to all of these guys. So you're going to end up sending out, plus the two senators, Manchin and Sinema, which I probably mispronounced her name because that's what I do. And especially if you're in those districts where we're at, talk to your friends. Tell your family and friends to write in. Give them the letter, even if they don't have a story, just a form letter. We need to be heard. The problem is there are so many special interests making noise that we are not being heard. And this little language that was slipped in right now is very likely to pass. So what can you do? I try to make it easier, handsOffMyIRA.com. I explain the law in greater detail than we could on this call. I'm probably going to update it as I have time because I also have a practice. So I don't always have time to do as much as I want, but I've done a lot. I want to explain where it came from because this all has a genesis from certain members of Congress and from the IRS, frankly. And what to do. We give you the critical representatives to contact. And we're going to ask you to do it repeatedly. There are inflection points where we want you to send the same letter and call them again and fax them again and email them again. Physical letters make a big difference. Spend the time and the money printing and putting a stamp onto dead tree. It makes a difference. There have to be, though, a lot of you doing it. What are the inflection points? When they go to amend in the House, when they go to vote in the House. Once it gets to the Senate, there'll be repeated inflection points, especially focused on Arizona and West Virginia. And if you know people in those districts, they get more attention, obviously, than out-of-district people. This is going to be a long fight. We're going to have to repeatedly send. It's going to take some effort. And we got to be passionate about it. We got to be passionate. Now, I'm not including you guys, but from what I've seen from other custodians, they're sending out one or two anodyne, dull emails that say, contact your rep. I'm sorry, but that's just grossly under what we need.
Yeah, we're really trying to take. Oh, sorry, a little background on there. We're really trying to take this seriously in the best interest of our clients. Notwithstanding the business aspect of this, we care about our clients and their ability to use this service to benefit themselves. Now, with regard to the representatives that you listed, which is a great resource, it's all right there. I'm not going to take the time to prattle off, all these different names. But, like you said, printing a letter is going to probably be, a kind of a gold standard past just actually getting FaceTime with these people, writing it in, if the staffer in their office has a stack of, 30 letters with this stuff in, that might get brought up in the staff meeting, that kind of effectiveness, as opposed to just going into a general email queue when you go to their website and say, hey, click here to, copy paste, that kind of stuff, having that physical media in front of them. Now, it's great to contact these people, and I would recommend that any of our clients that are concerned about that do this. Now, on the Senate side of things, is it worth, the effort of, shifting any of the focus from this to emailing the Senate representatives for your state as well, just to get it on their radar in case it gets through the House and into the Senate?
Look, once you've got the effort here is writing the letter and telling your story, or if you must, I did put this on there reluctantly on the website, easy. A couple of clicks and send something in. I think it's grossly inadequate, but it's better than nothing. I think you need to contact these reps. I think you should contact your reps, both your congressional rep and your two, because we need it to be heard. They talk. They do talk. And right now, what I'm hearing, I've talked to so far 2 reps offices and 1 senator, all Republican. The Democrats right now are a little busy. They're a bit preoccupied trying to see if anything's going to pass. So the Republicans I've talked to were not aware of the issue. Was just amazing to me, because I know they're being talked to by custodians and they're getting some letters. But remember, a lot of people right now are screaming a lot louder. This huge bill is affecting a ton of people. And while we're sending things in, it's not enough. The other noise is drowning out. And so a letter sent in has a huge impact compared to an email. I would do it all. I would send a letter, an email, and a fax politely. I had one client who was sending it every day, and they finally told her to stop. And see, that's the opposite effect of what we want. It's going to upset people, and we don't want to do that. We want to persuade them. And frankly, we're going to put up there, I haven't put up yet, a dialogue to call in and talk briefly of, look, here are my concerns. It only has to be a minute call. They're not going to drill you. We just want them to hear the same thing over and over. It's outreach. If there's enough passion, talk to your friends, talk to your family, talk to your fellow investors. This is going to cut off funding for a lot of people's projects. If you think about this, go ahead.
Here's kind of a civics question that hopefully you might know the answer to. When a representative or a senator, someone holds kind of a town hall meeting, are those normally originated on the side of their constituents requesting that they come and hear them out, or is it done on their side to kind of curry good favor? Is that
the latter?
Feasible? The latter?
Yeah, mostly the latter. And most of the representatives that do that have to feel pretty comfortable in front of a crowd. We did have somebody, it was actually one of the people we had listed. It was a moderate Democrat in a suburban district that normally goes Republican plus 2 points, go to the meeting and make some points. And they weren't sure what to do with it. It was very politely received. And so you're not going to have a dialogue. Yeah. They're not going to cross-examine you. But the more times we can get the point so that we get heard, because that was heard more, I think, than a normal call or a fax or an email.
Sure. And do you know if there's a resource where people can find where these things are going on? I mean, I'm sure they probably put them on their Facebook, or is it on any type of official agendas that they put out there for their activities that they do? Or is it just kind of
I've found them very quickly by Googling.
Just Google.
Yeah, I just found it very quickly. If they have it, they actually do want people to show up. So it's very easy to find. And as I have time, I mean, this is crushing me right now. I mean, we're doing tax deadlines. This is the last year I'm doing any returns. It's all planning. And I'm normally pretty busy anyway. It's crushing me to do this, but it's the right thing. People got to take the time and get out there and do it. I will be updating the website. I got a great letter from, I don't know if you're familiar with Vina Jones Cox out of Cincinnati, real estate educator.
Yeah, Mid-Ohio REIA.
She wrote a brilliant letter that I want to put up on the website. That's sort of a template. Now it's massive overkill. It's because it's Vina. I mean, so where you could do it in a page, she does it in about 7. But it's a beautiful template of how to tell your story. And there's some good cut and paste pieces. For example, minorities are greatly underrepresented in non-IRA pension plan types. In other words, minorities disproportionately depend on IRAs, and this is what you're hitting. You tell us you want to fight Peter Thiel, you don't like billionaires, but you're forcing us into the hands of Wall Street billionaires. What's going on here? So I think and we told them, we concede, look, a $10 million cap with a better inflation adjuster, maybe a little bit higher cap, or maybe some grandfathering. But look, a $10 million cap again solves 98.98% of the problem. Why are you doing this? And if we have time, I can tell you, I know why, and I know who's behind it. It's not conspiracy. It's pretty easy to track the fingerprints.
Yeah, exactly. And this isn't the first time we've seen some of this legislation, which is, again, important that it continually gets defeated, because if it continually gets defeated, then it won't continually reappear, hopefully. That's kind of the precipice of this, is that this is relatively repackaged verbiage of the, was it the RISE Act? Yeah, the RISE
Senator
Act.
Wyden,
yeah, Senator Wyden out of Oregon.
Yep, and there's no talking to him or his staff. As soon as you talk to his staff, here's what they say. It's not fair. And I'm like, well, listen, guys, you're the ones who said that you have to be an accredited investor to invest privately to protect the little guy. Now you're saying the little guy isn't getting access to these deals, and therefore we have to ban the big guy from him. I mean, which one is it? Pick one. And so here's what happened. And this is all documented, no conspiracy theory. If you look at the ProPublica article, they cite where the IRS said in 2009, we want to ban self-directed IRA investing. And the reason is it's too much work for them to audit. Now, they didn't say it that way. They used a slightly more polite language, but that's what they said. It's too much work. We would like you to ban it. Wyden's office has a similar view for a different reason of simply, it's not fair. And so this is their way of getting what they want very subtly and indirectly. It's only, these two really bad provisions are probably about it's a few paragraphs. It's not that much in an 800-page bill. And it's absolutely fatal. It's the knife thrust you don't see coming. And so, Lord, we've got to make noise. We need to get each representative getting hundreds of communications for it to be on their radar, even if they're from out of district and especially from in district.
Absolutely. It's incredibly important to make sure that the representatives, the people that are representing you in government, are understanding your concerns about this, because just, the goodwill that you are trying to put out there without any action is not going to effectively combat this. Now, with regard to another concerning part about this is that I understand, from people out there, there's a lot of people in general that maybe just are a little burnout on politics over the past few years. Whether you are whatever side of the aisle you were on, there's been a lot of talk just about politics. And this is how some of this stuff kind of gets through, is when people are burnt out and aren't paying attention. And unfortunately, we have it's over $4 trillion of combined legislation between the Reconciliation Act and the Infrastructure Bill, correct? I think it's 3.5 currently and 1 for infrastructure or something to that effect.
In that neighborhood, yeah, in addition to what else they passed, yeah.
And the other concerning part about this is that with reconciliation, so long as they meet some rules set out by the rules of reconciliation, they only need a simple majority to pass this. Throughout they don't need 60 Senate votes to pass this. They only need a simple majority of 50 with the Democratic vice president they will have.
Right. So they have to have everybody agree. And that's where our fallback, you have several lines of defense. Let's try and stop it in the House and get the language removed. And if not, then we turn to the Senate. So they can't have anyone defecting in the Senate. But in the House, we only need 3 moderate Democrats to say, this is not a moderate thing.
Mm-hmm. Exactly. And that's, again, working a bit in our favor for this is that the margins are small with regards to the votes in the House and Senate. So it's not as if there's overwhelming majorities in one versus the other. There's not a whole lot of people that need to have this brought to their attention, which is going back to what you are encouraging people to do, which is write and get our voices heard and have people that are making these votes understand what exactly goes behind it. When you look at $3.5 trillion worth of spending, this is so minute. It's 2 pages. I think
the revenue raise,
yeah.
The revenue raise here. So the revenue they estimate to be raised was $2 billion. Right. 2 billion. It was specifically, I think it was 1.8 on over 10 years. So 180 million a year on the 10 million limit, which I don't really care. If they want to do that, that's fine. And then on the stuff I talked about, and there were a few other things we didn't mention that are not as important that, on a future call we can discuss. But those 2 issues I discussed, between them raised less than 190 million per year, which in a freaking $3.5 trillion, it's not even a drop in the bucket. It's not even a rounding error. So it's not to raise revenue. It's specifically I think it's going to cut out better than 50% of self-directed IRA investing. How many people use entities for asset protection of any sort, partnerships, trusts, LLCs, blocker corporations to reduce UBIT? Mm-hmm. How many people do joint ventures because their IRA is too small to do something on its own? How many people do or want to do alternative investing, which, by the way, is growing rapidly, as I'm sure you know. You probably know better than I do. Just how fast the appetite for getting out of Wall Street and into private stuff but have to be accredited, sophisticated, or meet the crowdfunding requirements for, that's growing. And they're going to kill that now.
Oh, exactly. And just the the benefit of it, I really think was clearly shown. It was about 3 weeks ago now when the Chinese real estate investment firm couldn't make their first round of debt payments, and it caused the Dow to sink 800 points in a single day of trading. That's an investment company not even on the same continent as us, affecting our markets that much. And if that just goes to show you, did your real estate portfolio drop by that number? No. Did your rental rates automatically go to zero because of something like that? No. The appreciable benefit of doing this kind of investing is, right now being directly affected by this legislation. And that's what we're trying to get out to people, is that, even if you say, oh, well, I don't invest in limited partnerships, I'm just, I have my IRA owns a piece of rental property. Well, maybe at closing, you had that done through a Florida land trust. That Florida land trust doesn't have a tax ID number. It doesn't have a bank account, but it's still an entity. So
but do you think they'll stop there? So let's talk about, for the moment, who will it not affect if you have an IRA? If you buy rentals 100% and you don't hold it in a trust or LLC, if you do private lending, for the moment, if you directly do those things, I directly buy crypto. Okay. But what if you change your mind? Don't you want options? Well, no, it doesn't affect me, so I'm not going to fight it. All right. And let's say you never change your mind. You're always going to invest in one of those three things, for example. So what do you think they're going to come for next? What do you think if they get away with this? Do you think that they're going to stop pushing things in the direction of Wall Street if people switch from what they've been doing to, okay, I'll own a rental naked in my IRA, or I'll do crypto, and I can't do all those other wonderful things? I don't think they'll stop. That's one of those things where, give an inch, they take a mile. This is the beginning.
Absolutely. And from your opinion on this, do you think that the effect of bucketing your IRA property, let's say they get rid of the LLC and you have to start, structuring things directly in an IRA for general liability protection purposes, do you think at least that it's going to hold true that you could still bucket individual properties and IRAs to help mitigate some of that risk, and instead of just holding a portfolio all in one IRA if you can't utilize a partnership LLC?
Well, I'm going to give the usual lawyer answer. It depends, yes and no. Specifically, if you have rentals in multiple IRAs, your IRA does not have an asset protection shield like an LLC. So if somebody trips and falls on your rental property, you can be sued personally. The IRA provides no shield against that. So let's say they get a judgment against you personally. The IRA's assets and your personal assets are at risk. Now, are your other IRAs that hold rentals at risk? Less so, because IRAs do have very powerful creditor protection against your creditors. So I have a trip and fall in one IRA. They get a personal judgment. I now have a judgment creditor personally. So my personal assets are at stake in addition to all the assets in the IRA that had the rental. The other IRAs, at least at first glance, would be fairly safe unless you did something in there to make them not safe. There is a shield for the other IRAs. So there is some indirect asset protection, but still having a personal judgment is a non-trivial thing.
Oh, absolutely. And it's just something that I really wanted to illustrate to people is that, they're taking away some of these abilities to help mitigate risk in your investments, to help you protect what you've worked so hard to build. So, while again, some of this may seem trivial to some people, I really want to impress upon people how much it can affect any number of ways that you invest in a self-directed account, and the importance of, making our voices heard to help try to preserve this, very beneficial way of investing for so many people.
Well, this is just classic bait and switch. I mean, as you know, the existing IRA rules are very complex and very, very harsh if you break them in the case of prohibited transactions. So our mutual clients spent a lot of time learning the rules, what to do, what not to do. The rules have been in place for some time, and now they're taking it away. That's not right. That's not moderate.
Absolutely. And to kind of bring it in for a landing, so I know you have a call you got to get to at 5:30. What we're kind of encouraging people to do is, write a letter. The path of least resistance of doing this is just going on the websites and sending the copy paste stuff. Maybe not the most effective. Put a stamp to an envelope, send it out. Make your voices heard. This can affect almost all IRAs. Presently, it's not extending into 401ks. Anything else that you'd like to add on there from kind of some?
There are some other, they are banning a lot of Roth growth. Without getting into the details, the backdoor IRA would go away, the 401k mega Roth would go away, and ability to convert if you make a certain level of income from traditional to Roth would go away, which I don't like, but isn't fatal.
Yeah.
So there's more to it. I wanted to hit the salient points. If you go and check out handsoffmyira.com, what I would encourage people to do, we have a link for you to get updates. Note, that link is only for updates on what to do to fight this. You don't get added to my list. We don't sell you anything. I'm not trying to make money off this website. There's not so much as a single Google ad. I just want to beat this thing. This is terrible for my clients. I'll still be fine. I'll make a bunch of money as a tax lawyer. Every time they change the law, what happens? People come to me for help. I'm going to be fine. I live in Puerto Rico. I pay a very low tax rate, 7% roughly on everything I make. So I'm going to be okay. This is not about me. I have a lot of clients that this is their retirement, or this is how they raise money for their business from other people's IRAs. So I would encourage, if you go to handsoffmyira.com, sign up for the updates. You will not be put on my marketing list. It will simply be, here's the time to write another letter, send another email, send another fax, call them again. We need to be heard. We're not being heard. It's going to be a long-term fight. You got to be willing to do it more than once. It's going to take some effort. The best thing you can do is customize it. Please, please, please tell your story. Except for those of you who do things like Peter Thiel, but on a small level, you guys don't tell your story. and I know you're out there, so you guys please know.
Yeah, well, again, I really appreciate you being on with us today, John. It's always a pleasure to chat with you. It's always informative. So again, thanks everyone for tuning into this edition of the Alternative Investing Advantage podcast. If you have any questions, please feel free to reach out to us, or you can go to Hands Off My IRA for a little bit more information and to contact John if you'd like to get in touch with him as well. Again, thank you very much for your time today, John.
My pleasure. Take care.
Thank you for tuning in to the Alternative Investing Advantage podcast. Tune in next week for more investing tips and strategies.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.